Hello, this is the TradeSite US Stocks and Futures Market Preview for Thursday, the 2nd of April, and Friday, the 3rd of April, 2020. As usual, we don't typically do market previews for Fridays as most of the week is played out. This one probably won't be much different, um, but if something really dramatic happens Thursday, we might do a preview for Friday. Always reserve the right to do whatever we want to do there. Here's the ES monthly chart. This is the broad market futures. Looking at that 13 sell signal that we got back in November and how we banged against that risk line twice and then rolled over and did what that sell signal is supposed to do. The red line's at the 1980, just under 2000 level. That is the target of that signal. So we'll keep that area in mind, of course. The market did pop for a couple days. Let's take a look at the daily chart here of the ES. It did pop for a couple days last week, mostly due to the end of quarter rebalancing and tagged out the close of the quarter on Tuesday and then immediately dropped again on Wednesday. Still firmly believe that we've got to, at a minimum, retest the lows, but more than likely complete that sell signal on the ES, go back towards that 2000 level and hit the red line that I showed you on the monthly chart. Which would still be about a 20% correction from here, and certainly take us. We'd be down 1,400. Sorry, we would be down 1,400 points off the highs at that point in time, which is about 41%. Still not as bad as 2008. And for those who say, "Oh, I don't think it's going to happen," just keep in mind that while 2008 was the complete collapse of the financial system looming, the job loss here is way, way, way. It's about 8 times as much already, and will continue to have ramifications throughout the economy. We're seeing major retailers laying people off now. We're furloughing people, and this is going to continue to be a problem. It may be that there is a fairly faster recovery off of this, especially with some of the Fed's actions with the stimulus package, maybe another stimulus package if this still gets worse over the next month to the economy, which it likely will. But in the meantime, in the short term, remember that we only dipped 1,200 points on the ES. We basically went down a third at the lows, and we only spent 2 days down there. Mostly we're down, about 1,000 points, which isn't even a third. And yet the job loss areas are much, much, much worse than 2008, where we saw a 65% dip in the S&P. So for those who try to justify away that the bottom is in, I urge you to be smarter about it. It likely is not, more than likely is not. And we go from there. Obviously, what I'd like to see tomorrow, as I said, because we had a gap down today, and that made it hard to get any trades going, because obviously when you gap down, it blows the shorts up, and it's hard to find short entries. And obviously, then we sold off. We'll look at the intraday action in a few minutes. So there wasn't really a lot of great setups. We were up from the open early for the first couple hours, and it was actually kind of boring. But then we rolled and did close more negative. So it just doesn't give you the great setup. Right now, as I say this, the futures are up for tomorrow. Now that can change overnight, of course, as it always does. But right now, ES up 25 and the NQ is up 70. That would be about, to me, the perfect size gap back up. It reclaims about 25% of the losses for today. It would give us a nice, probably, opportunity to short if that happens. So you'd rather have a gap up and short than a big gap down and short. That's just how that works. And unfortunately, right now, with the market being choppy like it is, you just got to be cautious. All right, let's go through the major daily charts. Crude oil was closed in the 20s again, low 20s. It's currently up in the aftermarket. Gold up $14, not at highs yet. The S&P cash, here's the big loser, right? Gap down, closes down 114 points for the session. The NASDAQ 100 down 327, both of them on some key moving average areas. SOX down 82.86, also on that moving average. The biotechs down 135. We were negative across the board today. The Russell 2000 down 81. This is just ugly. The small cap stocks have taken a beating here. And if this thing ends up down in the 800 range, then just keep in mind that's a 65% correction on the Russell 2000 since this started in a very short window of time. Not good for small cap companies that are going to have a hard time continuing operations and raising money, even coming out of this. The VIX only up 3.52 to 5706. It's very possible. Just keep in mind, we could have still seen the high on the VIX already, and yet have the markets retest and go lower. They're not directly correlated like that. If it happens fast enough, if we were to plunge, let's say tomorrow, all the way down to 2,000 on the S&P, then you probably would see the VIX make out slightly higher highs. The trend closes at 0.97. That puts the 10-day moving average at 1.13. NASDAQ volume a little lighter today. It's interesting because usually the up days have the light volume, the down days have the heavy volume. I think part of it because of the gap here, but we only have 3.7 billion shares on the Nasdaq, which is again the lightest day. And remember, that's going to help the VIX come back down, right? As volume settles down in all this, if that starts to happen, then the VIX is going to have a harder time spiking back up. Advanced decline ratio on the Nasdaq was negative 2,345, one of the 5, 6, 7 worst days of the year, in the last 12 months, right there. On the New York, it was negative 2515. That is the 5th worst day of the last 12 months in terms of breadth of the market. Google loses back 59.85. Apple loses 13.38. Netflix down 11.42. Amazon down 42.02. Tesla down 42.44. It's 10% of the stock. Facebook down 7.20. All the FANG leadership down. Goldman Sachs down 9.30, although it gapped down and basically sat there all day. TLT, the 20-year bond ETF, back up 2.31. The Dow Jones down 973.65. So, it was an ugly session all around. Everything's down. Now, keep in mind, again, with that rebalancing over, this is kind of expected, and this is just day one of it. It probably will lead to lower lows. I don't think there's a reason for us to just bounce back tomorrow. In terms of intraday action, this is why it was just an day from a trading perspective. The big gap down is what ruins it. We did sort of try to drift up for about 2 hours, and heading into lunch, we were basically sitting right about where we opened at noon Eastern time, and then we drifted down and kept, after lunch, drifted a little bit lower. But in terms of any clean action, it really wasn't there. NASDAQ side does look about the same. And again, I just urge caution to everybody right now. This is, certainly if you're the type of person that's asking, where's the bottom and what should I be buying? That's the absolute wrong questions to be asking. That's just not smart from what we do, from the perspective of what we do. You got to keep everything intraday. There's no point in rolling the dice overnight. You never know which way the gaps are going to be. Obviously, if you hold a stock long overnight and the market gaps up, you're going to tell yourself you were a genius when in fact all you did was throw a dart. And the same thing if you're short and it gaps down. So, it's not worth the risk in my opinion. I would just stick to doing what we do and let this play out. If we find opportunities, we're going to keep it tight, get your size down, use less size than normal, obviously, and then keep our stops tight. If we get some winners, that's great. And we'll know the bottom when we see it. A double bottom on volume is a very clear chart. We'll find it. In terms of economic data still coming out this week, there's actually quite a bit. Challenger job cuts at 7:30 a.m. on Thursday morning. Unemployment claims, that's the initial and continuing numbers tomorrow morning, Thursday morning at 8:30, along with the trade balance, which can be a big one. Factory orders at 10, natty gas at 10:30. And then on Friday, we've got the unemployment rate with the non-farm payroll, employment change numbers. Obviously, we all know it's not even going to be a full month's reporting. I mean, this is going to be, there's still data coming in, so it's not going to probably truly reflect what's going on like some of the other unemployment numbers do. For example, the weekly initial and continuing jobless claims numbers are expecting, 3.5 million claims. So that's a big number, much bigger than anything we've been seeing lately. Final services PMI at 945, ISM non-manufacturing PMI at 10 on Friday. Have a great weekend. Again, the other thing to think about is this: if we're down Thursday, are people really going to want to hold stocks going into a weekend with everything as we head into the worst part and the peak of the pandemic in a couple of weeks here? And the unfortunate timing of all this remains the following. Even though each state and city may have slightly different peaks based on, when it started, how their living style is, and how quickly they tried to make their adjustments, the average for the country is probably going to be around the middle of April for the peak of the pandemic in terms of most new cases. Obviously, the death rate trails that. The following week, next week, is a 4-day week. Friday, the markets are closed for Good Friday going into Easter weekend. And that's right before the peak of the pandemic and seeing how bad it gets and waiting for that curve to turn. If the curve does not turn by about then, shortly into the week after, then it's going on longer than what we thought. I can't imagine that anybody wants to hold stocks going into that 3-day weekend, 3 days of news and data. So, next week, whatever happens during the week, I would think by Thursday, you're going to have a negative sell off. I can't imagine people wanting to hold stocks this weekend. The thing that was holding the market up, other than the initial announcements about the stimulus, is the rebalance last week and into Tuesday. That is done. So, again, you'd rather have a gap up and a short size bias on the market. I don't want to see big gaps down because that makes it hard to trade and doesn't give us the opportunities. But remain more focused on the downside right now if you're smart, and go from there. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trading Thursday, Friday, and a safe weekend.